Hey everybody, welcome back to another episode of Invisible Head Investing. I'm the Invisible Head Investor, and today we're going to talk about the AMC dip that happened today and the expected rip that I think is going to happen tomorrow. So let's get started. All right, guys, so we saw today at market open that AMC dropped significantly in price. We saw shares tumble down to below $40, which was kind of unexpected and probably was meant to shake some paper hands out of their positions. Okay, so today news came out that AMC is selling another 11.5 million shares and issues a warning to investors. This 11.5 million share dilution was actually announced a couple of weeks ago. Let's take a look. So on April 27, 2021, AMC filed with the SEC that they were going to sell about 11.5 million shares of Class A common stock. Okay? It's just that people were probably a little taken aback because AMC sold 8.5 million shares a few days ago to Mudrick Capital, and Mudrick turns around and sells it one day later, stating that the stock is overvalued, and that's why they're selling their position. So let's take a look at the Schedule 13G, and we'll see that on December 10th, 2020, Mudrick Capital issued 1.58 million shares of voting power to Citadel. Okay, so Citadel recently took up partial ownership of Mudrick 4 months ago, and I think part of the plan to coordinate this attack, because we know that Citadel is heavily shorted in AMC, part of the plan was for them to acquire these shares and then dump them right away to create some FUD. You know, as a condition for them to purchase these shares, they could sell them right away. There was no holdback period. They could sell the shares right away, and they turned around and sold them the next day, stating that they felt that the stock was overvalued. Guys, there's a lot of news coming out that the stock is overvalued. AMC even released a statement stating that after it was announced that they were going to sell another 11.5 million shares, they warned investors that they may lose money. And I think this is part of their due diligence on their part, because they have a fiduciary responsibility to their shareholders to let them know that, hey, the stock is pretty volatile right now. So there's a lot of news coming out right now in the media stating that AMC is way overvalued. AMC puts out their warning that, you know, for investors to be careful because they could lose money due to a lot of volatility in the stock at this time. All you apes know that this is not a value play, okay? This is to scare new investors and the paper hands out of their positions so that the stock price drops and the hedges can recoup some of the losses that they've been sustaining over the last week. We know this is not a value play. We're here for the short squeeze. We're here to inflict pain on the hedge funds, which we're doing and we're going to do. And that's it. We know this isn't a value play. When the squeeze is over, then the stock will come back down to where it's supposed to be, to fair market value. But right now, this isn't what we're talking about. And the media is not really focusing on that. Okay, they're looking at the fundamentals. This has nothing to do with the fundamentals, as you guys know. So we've had a few different events of share dilution. Look, if you go back and watch the first video that Trey's Trade did with Adam Aaron, Adam stated in that video that AMC had 63 million shares available if they needed to sell to raise more capital. Right? And if you look at what's happened over the last few weeks, we had the 43 million share dilution. And then we had the 8.5 million share dilution to Mudrick. And now we have the announcement of the 11.5 million shares that are going to be sold or made available to sell as well. If you add all that up, that's the 63 million shares that they had available to raise capital. And Adam Aaron is doing the right thing. He's putting AMC in a much better and stronger financial situation by selling stock at these prices, because it's going to put AMC in a much better situation to acquire movie theaters that went out of business during the Roni, and to maybe pay down some of their debt. And they have a lot of cash on their books. They've raised over $2 billion in the last 6 months, which is phenomenal. Adam Aaron is putting us in the best possible situation to succeed and go forward. This is a positive catalyst. This is not negative. selling all these shares, the 43 million shares, and then the 8.5 and then the 11.5, it's not a negative catalyst. Yeah, there's some share dilution, but it's good dilution, and it's for the benefit of the company. Guys, leave some comments down below. Let me know if you agree. I really think that tomorrow we're going to see a pop in the stock. If you look at the charts from yesterday until today, the RSI needed to cool off big time. Okay, we went up almost 100%. At one point, we were over 100%. We more than doubled the price of the stock. Okay, we needed a healthy pullback to where we are now, and we got that today. So yeah, today is a bit of a red day, but it's a good kind of red day because it's setting us up for the next rip. So guys, thank you for watching. I'll see you guys in the next video.